Good morning, guys. Real quick morning video here. I'll try to keep it under 10 minutes. So basically, yesterday, I got my market maker moves on here. And so basically, what I've got going on here, the blue line right here, that's your Monday market maker move low. The pink one is your Tuesday market maker move low when we came in yesterday. And right here, what I'm looking at here, this light blue line right here. That is your market maker move for today, expected move high. So we've got a script change since Google and Microsoft reported. Of course, everything's up this morning. And we are right up here around the 3960 is what we're going to be opening at here on S&Ps, suggesting that we're probably going to be testing our market maker move high for today here on the S&Ps here on near the open here on these markets. We are inside the Monday Tuesday gap, suggesting that the markets are wanting to fill this gap from Monday and Tuesday early on this morning. So keep in mind there. So Monday Tuesday we got a gap above us, and then we have this opening gap this morning that still might want to be satisfied to the downside. So we got a two gap scenario to start our session this morning. So definitely keep that on watch. On my 2-hour charts, okay, I have a shooting star basically on my 2-hour chart, okay. And if you look back in time, so we are currently trading above that shooting star. That was a prior swing high, okay, and we are trading above this. So this is a little bit more bullish. So in my opinion, as long as we can hold over the 39.45 area, you have to lean a little bit more to the bullish side. Okay, we came down yesterday, right down to the bottom, to the top of the body of that shooting star on the 2-hour, and that marked the low of the session yesterday. This suggests to me, going forward here in today's session, as long as we hold over the 39.11 area, that should be a support area in today's session. So I just want to float those two little ideas here going forward here. But pull your 2-hour chart back and look back a couple weeks. There is a potential shooting star swing high, okay, and that we have broken out above it earlier this week. Thursday, Friday, Monday we were above it, and then yesterday we broke down into it, okay, suggesting that all this inventory up here was wrong. Well, now today we're back above it again, suggesting that this inventory may be valid. So be aware of that scenario going forward into today. SPY, similar situation here. We are into this gap. We haven't completely filled this gap to the upside. And this is our current downside gap. Back down into testing this prior support range after, what is perceived as a little bit better than expected numbers out of Google and Microsoft. So be aware of that. But this is Fed Day. Typically, you'll see an underperform in tech on Fed Day. Okay. QQQ. Okay, Qs, guys. Here's what's going on here on our Qs. So bottom line is we have a gap from Monday, Tuesday that has not been filled. Okay. Going into Fed Day, like I said, tends to be a little bit more bearish going into the numbers, typically, because the higher interest rates may or may not plan out that way. Okay. We have Microsoft and Google reporting this morning or last night. And here's what I want to point out here on your pre-market movers here. You come down here, you got barely over 100,000 shares traded on Google and Microsoft. Okay. I have seen millions of shares traded on Google and Microsoft, post earnings. Okay. This is talking about all that inventory, that this is all this morning's inventory that's been trading hands. So very, very light volume on these megatechs post what was, quite frankly, a major news event. So definitely keep that in the back of your mind going forward here. That suggests to me the lack of participation that, they might want to forget about filling the upside here and come right back down here and come back down into your supporting, back test your lower end of the range before actually trying to go higher. So that is the bearish case going into today's session. You are a little bit more bullish on S&Ps. So I don't want to overflow, understate that. Another major takeaway that I got going on here. So I'm going to zoom in here a little bit, guys. I don't have Tuesday's market maker move on this chart. Okay, this was Monday's market maker move. We came right down into it. Market maker move low. Okay, for Monday. We saved that. That was also our current weekly regression low. So they came into weekly regression low and the market maker moved low, and then they got a little bit of a rally there into the close, and now we're out above our regression for this week. Okay, as also this is our July regression low. Okay, so we look below our July regression low. That suggests, we're going into, we're on the 27th of the month. It had more of a bearish bias going into these numbers, but so far this morning, we'll see what happens going forward here. So definitely keep this one on watch. This right here, the magenta, I think this is called magenta. This is our current market maker moves for today. Our main takeaway, we are outside the market maker move expected for today. That suggests if we can hold up here, this is potentially a gamma squeeze scenario going into today's session after those numbers. Now, I don't know if that's going to be the case, but if we come in here and early on, we could be gamma squeezing in tech to the upside because we are beyond the market maker move, expected move high for today's session. So do keep that in the back of your mind. The volumes this morning do not support, that type of participation, in my opinion. But anytime you get above this market maker move, you have to be aware of that. So if we were to start breaking above the pre-market highs in this scenario, it is, technically a long in the markets. You have to be on the long side if we start breaking above pre-market highs, in my opinion. So just some food for thought going into today's session. The rest are real quick here. Pretty much neutral on the month. We're right on the regression line for the month. No extreme strenuous type of situation going on here on the IWM. Probably going to be dead money today, in my opinion. So be aware of that. So you're pretty much completely neutral on the month going into the month here on the Russell, in my opinion. Really no edge. You as a trader, you want to be trading the extremes. This is not, it's pretty much dead money. Probably not going to see much of any action in today's session, in my opinion. The IVs are jacked a little bit. You see how they're outside. It looks like they're jacked up a little bit more than they were yesterday, in my opinion. So just keep this on watch going forward here. And so it does look like we filled yesterday's lower range gap. So I will be looking for a potential breakout to the upside today. If that happens, because, look at that support, resistance right there. So if we were to break out of pre-market highs, then that is probably along into the afternoon. Okay, guys, we're going into Apple earnings tonight. So this really is the most important chart, in my opinion, to be watching today. So we are in the lower end of our July regression. Okay, right here came down near the lows of this July regression. If we were to go back down, retest yesterday's lows here on Apple, that puts us right into the bottom of our potentially into the bottom range of our July regression. Remember, Apple is not like Microsoft. It's probably going to have a more direct impact to the consumer. So be aware of that. Consumer numbers out of Walmart was a little bit scary. Okay, so Microsoft or Apple really hasn't pulled back much in this correction in the markets. So in my opinion, there is a lot of potential downside risk in Apple, but we'll see what happens going forward here. So as far as today's expectations, they are major support down here around the 144 area. That is your major support spot here for Apple, and this is today's expected moves. Okay, and the movement's going to happen after hours, so I wouldn't even want to trade this because the IVs are so jacked. Well, these are Friday's expirations. I'm sorry, Friday's expirations on Apple. and the IVs are really jacked here. So there are potential move down to 144, potential move to 159 here. Those are the expected moves here. Not expecting a big outside move on these earnings. But they do have a lot of China exposure, and they have slashed prices on some of the iPhones and stuff in China, which rarely happens unless there's a big inventory backlog, extra inventory to do so. So be aware of that scenario going forward here. So we did here in the gap down. So we are trading above the gap, which we put in from Monday to Tuesday. So we are currently trading above that gap. So that will, if we open it up in this range up here, that would satisfy this gap here. I can delete this. So now we have a potential gap down from today's gap up that we would have to worry about. Would they want to satisfy the downside and fulfill that gap to the downside in morning session here? Okay, 11 minutes, so I'm going to call it quits. Please like my video if you like it, and give me feedback on the down below if you can. So, yeah. So heads up. Thanks a lot.